thanks to FX Street for hosting me again here. It's been missed everybody on this side. It's been a while, so thank you for that, and I hope that you enjoyed today's session. Let me throw the two-bit disclaimer at you, and we'll move forward from there. Welcome to FX Bootcamp. This is not an alert service, not going to make any direct trade recommendations. What I will do is conduct some live fundamental technical analysis of some like put together a profitable trade plan or three. Please bear in mind that trading heavily leveraged risky, so please do not trade your hard-earned money until you have a track record of success or using your broker's PayPal account. Past performance does not predict future success, and I hope that you thoroughly enjoyed today's session. Alright guys, well, we've got almost 400 people registered for today, and I only see 140 in the room, which means that even by my African math standards, we're a little bit shy. So I'll take it slow here to begin with, because no question that there'll be a little bit of repetition. But so let me sort of give you the agenda here, what I had in mind, and you know what I'm going to do here. Bill, you know what, that is all that matters. I was actually waiting to see if your name popped up in the room, because I was like, look, we can only go as far until Bill arrives, and then then we can move forward. So, yeah. Good morning. All right. So, all right, guys. What I had in mind here is, yeah, it's all fun and games till somebody loses an ear, right? So what I thought to do here, the webinar is entitled "How to Build a Solid Trading Strategy." Okay, how to develop a robust trading strategy. I've heard this word robust used a lot. So I'm obviously going to give you the crash course, and for those of you that have attended my previous stuff, unfortunately, I have some good news and some bad news. The good news is that you're going to get a refresher course. The bad news is that I don't have anything massively new and cutting edge to share with you. It's the same old price action stuff. It's the same old thing that you've seen a million times. So I'm going to, my philosophy with that is if it's not broken, don't even think about trying to fix it. Right. So, morning. Right. So, what I anticipated doing was sort of giving you a price action 101 crash course. Maybe talking about a little bit of money management stuff. And that is going to get us really close to the end of the session. All right. And, money magnet, I wouldn't, yeah. Well, that's going to get us pretty close to the end of the session, and then I'd like to leave a little bit of time for some Q&A if possible, because I'm sure that that'll sort of lead us in the next direction. All right. So let me get cranky and not waste any more of your time. Well, guys, FX Street will be doing the recording. You don't have to do it. And then, Maud, correct me if I'm wrong, but it'll be posted, 24 hours, 48 hours from now. And you'll be able to watch, you'll be able to capture the corny humor many times over. Alright, so, what goes, let's just talk about the sort of a quick evolution of a trader here, and then we'll go from there. And I believe part 2 is for premium members only. Right. So you're going to have to premium up. Hey, Albert. All right. So when I first started Forex, and I think that everybody sort of follows more or less the same sort of track here. It actually looks like New York could be a decent trading session looking at the way things are going. But when I first started Forex, this was sort of my evolution, and it's been my experience, and it's been fairly similar for a lot of other people. All right? And one of them is, or this is sort of how it went, and I've talked about this before, and I'm going to start drawing on the screen here, but we all start with Forex or trading not knowing anything. All right? And you might have had, you might have had some sort of background in options or equities or commodities or something else. But for the most part, most of us, we started not knowing anything. All right? And this is sort of the track that I've taken personally, and I've seen a lot of other folks take the same sort of thing. All right? And this is more or less the rough sort of evolution of how this goes. Right? And a lot of you would have seen this before, and I'll ask you to just bear with me, and maybe there's something new along the way. All right? But when we're brand new, what do we start with? We start with knowing absolutely nothing. All right? And inevitably, what happens is that you start binge reading. Okay? And you read absolutely everything that you can get your hands on. You read, you'll go on various blogs, and you'll go on various forums, Forex Factory being the notable one. You'll read, and you'll have every person out there that thinks, there's a million people out there that are experts. There's a million people out there that claim to know a whole bunch of stuff, don't really. And then there's also a bunch of people out there that know a whole lot of things. But there are, what I'm trying to say though is that one just tends to read a million different things. All right? And it can be a little bit overwhelming, to be honest. All right? So what happens is that we all sort of binge read a bunch of stuff, all right, and try to gain as much sort of knowledge as we can, all right? But how does one really know when you're doing all this vast research what works and what doesn't work? Okay? So inevitably, you'll read stuff on Elliott Wave. You'll read stuff on moving averages. You'll read stuff on fundamental analysis. You'll read stuff on different types of technical analysis. You'll get people that trade market harmonics. Heck, when I was learning Forex, I stumbled on this website where people were making trades based on astrological stuff. Literally, like when this planet aligned with this one, they would take this position. Okay, and this and so this is sort of the world. No, honestly, I'm not making this up. Okay, and one doesn't really know what's legit and what's not. Okay, well, what inevitably happens though is that you sort of stick to some things that make some sense. All right, and inevitably, you kind of gravitate to some of those things. So for me, it was sort of a move towards price action. Does it sound decent? Allison's telling me she can't hear me. Okay. I see the little thing moving, so it should be okay. All right. Okay, so this is sort of the track that people take, all right, is, this phase one here, we are ranked losers. All right, I hate to use that word, but it is what it is. You buy in the wrong place, you sell in the wrong place, and you know nothing. All right, it's not your fault. It's just the fact that we're not particularly good yet. All right, and the big sort of thing with this loser phase is that you're trying lots of stuff. All right, so I'm just going to put you lots of systems. Okay, you're just trying lots of different things. So you're trying a little bit of this and a little bit of that, and you're going kind of back and forth on whatever you're trying. And really none of it's working for you because you have no idea how to implement any of it. You're not a specialist on any level, and you just are trading. You just donate pips ad infinitum to the market, all right? And this phase lasts. What do you think? Depending on your level of motivation and level of initial knowledge, how long do you think this just blatant loser phase goes on for? 3 months? Probably 3 months. Okay, John T says 3 years. Okay. All right. Then you start to get on the clue train that, hey, maybe I need to educate myself a little bit. Yeah, it depends. There's lots of variables, isn't it? How much time you can devote to it. Your aptitude level, frankly, because everybody's different in many respects. All right. But the bottom line is that you're trying lots of stuff. Okay. The next phase one enters into here is you pick up on a couple of things. So let's say that you like oscillators. Let's say you like CCI and, I don't know, Elliott wave, for instance. All right, and you come up with this system using CCI and Elliott wave. All right, and then the phase two you go into here is I'm going to trade a lot. I mean, a whole bunch. Lots and lots of trading. And you're going to make lots of pips, but you're also going to give back probably a little bit more. So you're probably going to make 100 pips a day, and you're going to give the market 120. All right? However, you have now adopted one trading system. And guys, if I miss your questions and remarks initially here, I apologize. I will get back to them, so please don't think I'm ignoring you to ignore you, okay? All right, so the second phase, you're just trading a whole bunch. But you are using this one trading system. All right, and this phase also lasts about 3 months, depending on the individual. Okay, so phase one's about 3 months. Phase two is about 3 months, and you're about 6 months into your Forex trading career at this point. Right. And Solomon, that's half the problem. Okay, this is half the problem why I think people stumble and fall a little bit. All right? Right. Then you go into this third phase. All right? And this can be a frustrating and exacerbating phase in Forex, trading in general. All right? And this is the break-even, spin your wheels phase. Okay? And thank you, David. All right. And this is where you're trading less, you're making pips, but you're also giving back as many as you make. You're not losing at this point, but say you make 40 a day and you're giving back 40, and on a different day you'll make 50 and give back 30, and on a different day you'll make 30 and give back 50. The net result is that your equity curve does this. Your $2,500 account goes from anywhere between $2,700 and $2,362 for months. Okay. Now, this phase lasts generally 6 months. Okay? Who can attest to any of this so far? All right, now, here's the thing. Okay? Here's the thing. Is that most people at this point don't realize that analytically they're actually not going to get any stronger than this. Okay, you've got to know some things to get to a break-even phase. You cannot be, you've got to know some stuff. All right? Now, the tricky thing at this point is that this is what happens, okay, is that the thing that's required to propel you to stage 4, okay, stage 4 is Stage 4 is making 15 to 20 pips a day. Okay, it's a grind, but you're now profitable. On average, at the end of the week, you're going to be up 60 to 100 pips. I use 50 to 1 leverage, but in terms of lot size, I'll never risk more than 1% on any given trade. And typically it's more like 0.5%. So I'm very, very, very deleveraged. Okay? Right. So stage 4 is a sort of 15 to 20 pips a day. Alright? And the thing though that takes you from this break-even phase to the 15 to 20 pips a day phase is what? Right, it's any number of things, but it's not analysis. Okay, this is the important thing. Okay? To get you from here to here, it's money management. It's getting better at money management. It's experience. It's consistency. It's psychology, meaning that, you know, your patience and discipline gets better. You know your strengths and weaknesses. You stop trading the rubbish. In other words, you can identify a poor market and trade less. The novice trades more in bad markets. That's a big deal. Okay? However, it is not a new system. System, is the trading system the problem? Not so much. Okay? You don't change analysis. So inevitably what happens here in this break-even phase, and it goes on for months and months and months and months, what happens here is that this person goes, you know what? I'm not happy with the way I'm trading. And guess where they go? They dip into the Holy Grail bucket again. And they go, there has to be a better way to skin this cat. Right? And they go, you know what? This CCI Elliott wave thing I had going on is rubbish. Let me go and see what else is out there. And then this other razzle-dazzle thing, this new slope indicator they see, man, this thing looks like money. Right? And then guess what happens? Is that this whole phase starts again. And I'll get to phase 3. And we'll start to spin our wheels again. And it'll all get a little bit silly. And you realize that you're basically liquidity in the market. And guess what happens? Toodle on all the way back to the beginning again. And inevitably what happens is that psychologically, your brain never generates a positive association with anything in the market. So your poor brain never knows what's working and what doesn't. And you've never done strategic testing to find out what's been successful with you over a track record or a period of time. So whenever you get into something, you're so freaked out by any adverse price action that you just jump out of it, because you have no idea what's worked for you in the past and what hasn't. So you'll get into something, oh no, it's working against me, you'll get out of it. Then it starts to work for you, and then you'll chase it. And then that works against you, so you'll get out of it for a loss. And so on, and so the cycle continues. Okay? All because you went and changed the strategy midway. Alright? So, when you get to that I'm at break-even stage in your trading, address things like money management. Address things like exit for loss. Address things like exit for profit. Address things like adding to your winners. Okay? Get the Forex tester and just pound out 75 trades. Okay, to up that experience level. But do not reinvent the wheel. You with me? Reinventing the wheel will be to your detriment. Okay. So, one of the things that I think should be incorporated, and obviously, guys, I don't know, I'm not going to pretend to tell you that my way of trading is the best way of trading out there. I think that there are probably literally hundreds of profitable ways to trade the market, and ultimately becoming a master and becoming a expert at your particular system is ultimately what's going to put you in good stead. Mike, I think that's just a matter of experience. I don't think that is going to be, I don't think that there's anything necessarily that one can do there. I think that there's some things that you can do there for when you have certain elements of the market lining up. You know that you're likely to have a big runner for that day/week, and you can trade accordingly. So, just knowing when there's blood in the water is a lot of times what's going to take you to those bigger pips. Because I know for myself is, my sort of journal will be like plus 40, plus 32, minus 18, plus 61, plus 27, plus 58, plus 275, plus 62, minus 23, minus 14, minus 19, plus 53, plus, 196. So, it's just continuing to do the same things consistently and then knowing when it's time to press it. Okay, so my moving average values. Yeah, Sirach, don't worry about it. I use a 21, a 55, a 200, a 5, and an 8. 8's an estimate. Okay. All right, so what should be the basis for your trading strategy? Let's talk about this. All right. So one of the most popular questions I get is, what time frame do you trade on? Okay. So what goes into a trading strategy, guys? Okay. Obviously, a trading system is the big part of it, isn't it? In other words, what is going to put you in a trade? Analytically, how are you going to go trading? After that, you're going to have things like, what is my money management, right? How am I going to cut a trade for profit? How am I going to cut it for loss? When am I going to trade? When am I going to add to things? When am I going to reduce lot size? The specifics of that are sort of secondary and probably more important to your trading system, but without your trading system, they don't mean anything, if that makes sense. All right. So in your trading system, I think that there are two major things that you should know about. Okay? And I differentiate here. One of them is you need to be able to determine direction in the market. And when I say direction, that might be direction for that day, direction for that week, direction for that session, direction for the next couple of days. The bottom line is that you need to be able to determine, is price going from A to B? Okay? Then, once you know that, then you can determine how to trade within the context of that direction. Does this make sense? Okay? So direction first, trading the price action within the context of that direction, that is a secondary action. Alright? So, how would you determine direction in the market? And really it boils down to buy low and sell high, doesn't it? I think even my mom told me that once. She could never pull it off, but she did tell me about that at some point. Right, multiple time frame analysis. Okay, market fractals. Alright, and this word fractal was told to me in trading, and I'd never heard of it before, but I thought that I could impress people at a party by saying it. Hey, Pete. Alright, so the definition of market fractal is as follows, and this is, I think Wayne mentioned this. Alright, if you show somebody a picture, and you show them the overall picture, and then you show them one little pixel of that picture, they should be able to see all the detail of the bigger picture in that one pixel. Alright? And so that is basically how the market works. The shorter term time frames are self-similar building blocks for the longer term time frames. So if you are only trading using a 15-minute chart or an hourly chart or a 5-minute chart, you are really doing yourself a disservice. No, I'm not. Just sit tight. I actually pulled the screen down so I have a fresh piece of paper here to draw on. Okay? So, although I use a weekly chart, a daily chart's really going to be the basis for my analysis, and then everything else is a deduction from there. Okay? And those of you that have seen this before, I'm sure you're going to find it quite boring, but I ask you to just stick with me while I sort of move forward a bit. Alright. You're not going to see anything on the chart. That's what I just said. Okay. Alright, so a daily chart, what if the daily is just churning up and down? Oh, you mean in a range, Kanaka? Right, then you'll use your shorter term charts for the trend within the range. Okay, and I'll show you what I mean here in a minute. We get a little bit of news or what? It turns out I might trade the news. Okay. Alright, so the idea here is to use the daily chart as the basis for your trades and then draw everything down from there. Alright? So, what I mean by that is this. Okay, I like to use price action and I like to use Fibonacci as my principal way of going trading in the market. Alright, and the reason why I do that is the price action, by defining trend, will give me direction, and then fibs are a leading indicator that will give me areas to buy and areas to sell. In other words, where I can anticipate finding other buyers and where I can anticipate finding other sellers. All has big time value. Okay, so if I show this to you here, let me grab my little price action sheet. How many of you have seen some of my other little webinars? And okay, so you kind of have some semblance. I mean, you're kind of on the clue train as to what I've been preaching. All right, so this is what I use to define trend. All right, just a couple of simple little chart patterns. So wrap. Just stop, dude. Okay. Okay, thanks. All right. So there's three ways we can change trend from an uptrend to a downtrend on the daily, and this is a 4-hour, 15, whatever. All right. Is if we're making higher lows and higher highs, as long as you're making higher lows in an uptrend, you're in an uptrend. As long as you're making lower lows, as long as you're making lower highs in a downtrend, you're still in a downtrend. So you can make as many higher lows as you like in a downtrend and it's still a downtrend. You can make as many lower highs as an uptrend and it's still an uptrend provided you make your higher lows. Alright? How does one define a swing low in the market? There's a bunch of textbook definitions for how to define a swing in the market. My most generic sort of response to that is, Oleg, I've barely even started with the presentation. Okay? So, alright. So if, guys, I got news, okay, I got news for you on something. all right, is that there is no one thing. If you're looking for something in Forex, that if this crosses that, and this lines up with that, and this crosses there, you're going to make money. I promise you, there is no such thing out there. I guarantee you. Because it works in one environment and not in another. Okay, so, this is why I like market fractals, because it'll keep you out of a lot of things. Thank you. All right, so price can change from an uptrend to a downtrend in 3 ways. Okay, one of them is if you have a little double top and then a break of the low. Okay, that double top break of the low will define the new trend to the downside. All right, the other one is 3 chart patterns. The other one is if we have a little lower high and then a lower low, those 3 swings there will define the new little downtrend. Or said differently, if we break the last 2 swing highs, or swing lows rather, that will define our new downtrend. So these chart patterns here, are our trend definition. Okay, does everybody understand this? Okay, our trend definition. All right. Now, the value of this is that if we know how to define the trend on a daily, we can then determine the genesis of a new daily trend and then trade it in the context of that. Said differently, we can figure out the start of a new 4-hour trend and then trade it in the context of that. Okay? And once we have the daily trend in mind, then it's just a matter of trading around that. All right, so here's the idea here, guys. All right, I'm going to give you the Fibonacci crash course, and then I'm going to tie that in with price action. You'll have an idea as to what I'm talking about. All right, and then we'll do the question thing after that and look at some chart examples. Well, you see, this is okay. So a double top by itself is not a change of trend. Forensic. All right, so a lot of times you'll get this sort of thing. You've got to break the low, exactly. Okay, a lot of people do this. And price will come up here. I see this in boot camp all the time. And we'll have this sort of thing. We'll have this sort of thing going on. And I'll see people saying, oh, I'm going to short that. I'm like, based on what? Oh, it's a double top. And then price will do this. Right? And all it'll do is make a higher low, kick out the perfect buying opportunity, and then continue to the upside. A double top is really only a double top until it's broken this previous swing low. Then it'll become short. But yeah, a double top, but because otherwise you'd be shorting every swing high and every swing low in the market that ever moved. So yeah, I mean that is the confirmation of the break of the previous swing low, and you don't short it at the lows either. You wait for the pullback. I'll elaborate here in a minute. Okay, now fibs. All right, so this is how price moves. If we just take into account those, all of them, frankly, Andrew, and give me a sec, guys. I tell you what, give me 15 minutes. I'm gonna blaze through some stuff, and then I'm gonna catch all your questions. We'll look at some chart examples, and this will start to come into context. All right. Okay, so if we're using fibs, all right. Fibs represent, if this is our chart pattern that defines trend, okay. Okay, remember this is one of our chart patterns where we go up and make a lower high and a lower low with respect to the previous, and we go from a bullish trend to a bearish direction. All right, much like the Euro 15-minute chart has done, this is the same chart pattern today. See if you can spot it. Okay, here it is. We went from making a series of higher lows and higher highs. Okay, price then made a lower high and a lower low, and it's subsequently been short. Okay, so we went from a little bullish market to a bearish market. Oh, hang on, the chart's taking forever to update. Okay, there it is. Hello. Thanks for joining us. Alright, so, okay, so I'll say it again, alright? That little chart pattern I just showed is this one, okay? So we became a bullish market by breaking these two previous swing highs. Okay, you guys saw that chart pattern. Alright, so as soon as we eclipsed this high, that became an uptrend for the day. Yeah, London bought you up. Boom, 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 up she goes. Okay, then it makes a swing high. Okay, higher low. At this point, all looks fine. Everything looks like an uptrend. Alright, then it makes a lower high and a lower low. Okay, at this point, we've now done what? We've now resurrected ourselves back to the downside. Okay, it was also at a key resistance level. We've also resurrected ourselves back to the downside based on price action. Alright, now, and that's just a representation of that chart pattern I just showed you, isn't it? Okay, now, okay, so given this pattern here, and I'm going to get to a point and there'll be an aha moment here in a minute. Okay, this is a buy zone. We're going to call it the green zone. Okay, Hotcom, catch up to me. There we go. Alright, this is a buy zone or a green zone of this rise here. Okay, and this green zone is determined by the 382 to 618 fib retracement. Okay, I'm assuming that everybody has a base knowledge here, right? And you've used the fib tool before, and you kind of have a feel for how this thing works. All right. So this buy zone is a 382 to 618 retracement. Okay, and then this little red zone here, although broken, is the implied sell zone of this swing drop here. Correct? All right. So in other words, if this chart is going to fail, if this price is going to fail, it would likely fail from there. Even though it's broken, the implication is that that's the resistance point. Okay, based on the fib of the drop. All right, price then rises. All right, pulls back to a green zone of this swing. In other words, a buy zone of this swing. Am I right? Okay, so this buy point here is the buy zone of this swing. Okay, also generated by the 382. That's BUY there, that's not BY. Just go with me here. Okay, and this red zone here is the sell point of this swing drop. Okay, and then said differently, this little zone here is the potential buy point of that little swing rise, although broken. Okay, and then the other thing to think about is that there is also the buy zone of this entire rise. Well, it's a zone, for instance, so it's between the 38.2 and the 61.8 fib. It's a zone. Okay, and we're going to call this, so we're going to call these little buy zones here and sell zones swing fibs based on the swings here. Not a technical term, it's a term made up of Chris Stevens, but it's helpful though. Hey Josh. Okay, and then this fib of the entire rise we're going to call a move fib, a fib of the entire move. Okay, does everybody understand this so far? Not completely. Okay. Right. Okay, so here's where, okay, Boyke, good question. guys, the bar zone here, if you take your fib tool, okay, the bar zone is the 382 to 618. So this is the bar zone right here. And the sell zone would be the fib of the drop through here. Yeah, I forget that the old cold com, slow com. Okay. All right, let me read Kellen's question. Hold on one sec. Okay, but if you fib the entire rise, right? So the rule is if you have hit support, you'll look for a move fib, Catalan. If you have not hit support, you'll look for a swing fib. I'll get the link for you at the end of the session. Okay. All right. Now, here's where this. Okay. Now check this out, guys. Here's where this comes into context. Okay. Get your question again, your Boyke. One sec. Boyke, mind reposting it? It's kind of disappeared up on the chat screen there. Okay. So this here, check it out. This is a swing fib based on that swing. Okay. This is a swing fib based on this last swing. Oh, it's any time frame, and this will make sense in a minute. Okay, so that's the green zone relative to that swing. That's the green zone relative to that swing. Okay. And the move fib is of this whole thing. And the bottom line is the rule of thumb is if you have a broken swing fib, you think move fib. So what'll happen is that you'll break this swing fib. That means that you're going to the move fib. That's what's happened on these daily charts. Look. That's all that's at. Check this out. If I drag this euro down. A little bit of lag going on, so I'll just be patient with it. All right, so we've made swing fib, swing fib, swing fib, swing fib, broken swing fib, great, move fib. You know, and now what's likely going to happen is we come off this, we come to the move fib of the rise, we head up, we hold this area as a lower high, resurrect the trend back to the downside, continue. Okay, anyway. All right, so here's where I need you to pay attention. Okay, let's look at a daily chart here, for instance. Okay, if the daily chart is doing this, this is your daily, making higher lows and lower highs, all right? Then it comes up, makes a lower high and a lower low. All right, so this would be your daily chart. Okay. Now let's take this area here, and we're going to take that block of information there, and we're going to fractal this thing down on a 4-hour. Okay, and this is really the basis for how I interpret the market. All right, and you will be able to, with reasonable amount of accuracy, predict and expect every pip movement in the market. Literally. That doesn't mean to say it's all tradable, but you'll be able to understand why everything moves where it does. Okay? So now if we're taking this square here, I'll highlight it in green. We're taking that green square. Now let's look at this on a 4-hour basis. Okay. This is your green zone of that, and that's your little red zone relative to that drop. Okay. All right. It is, Philip, and I'm not an Elliott wave technician, but there's pretty a lot of Elliott wave just by chance. Okay. So here we go. Your 4-hour then would be making higher lows and higher highs. Okay. And this here, this point here, is effectively this swing high there on a daily. Okay, nothing particularly difficult on that one. All right, then what happens? Price drops. Okay, but there might be longer term resistance there, whatever it is. All right, price drops. That then takes you to the little swing green zone of this rise here. Okay, which is effectively right here on a daily. Like right there on a daily. Okay, I don't see my cursor moving. Do you guys see my cursor moving on hot comp? Okay, good. Alright, cool. Okay, right. Then what happens is we go up and we hit the little red zone of the drop on the 4 hour and price heads down. Okay? And at this point, you have now done what on the 4 hour? So in other words, you've come off the green zone of the swing rise and you've hit the red zone of the swing drop. You've now got a change of trend on the 4 hour. So the 4 hour is actually now in a downtrend. However, the daily is still in an uptrend. Right? Okay? Now what happens is that the 4 hour hits what? The 4 hour actually comes down and hits the buy zone of this daily rise. Okay, so the 4 hour extends down and hits the buy zone of that daily rise. Then what happens? We bounce off that and we do what? We hit the sell zone of the move over the 4 hour drop. Okay, we hit the sell zone of the move of the 4 hour drop, and this goes something like this. Comes down to what is now a double bottom. Okay, at that point people go, well hang on, this is support. Okay, then price comes up to the swing fib of this drop. Okay, and we make a higher low based on the swing fib of this little rise, and price pops up. Okay, in other words, it's come off the swing fib of the red zone, and it's bounced off of the swing fib green zone. Okay, and now what have we done on the 4 hour? You've changed trend, right? You've resurrected the 4 hour trend back to the upside off that daily level of support. Okay, then at this point it goes to the double top, finds the level of resistance there, makes a swing fib of that, so in other words it comes down to the green zone of this rise, and we do this. Okay, now how is this beneficial to you as a trader? Okay, the genius of this is that you can use these shorter term time frames you can use these shorter term time frames to navigate the larger picture. So in other words, you can use shorter term trading and risk profiles to work your way into longer term and bigger moves. Okay, right, so you can use shorter term time frames to trade in the context of the longer term move. Okay, that's big time value right there. Exactly. Okay, so I use an hourly for continuation, but I use a 15-minute to execute and a daily and a 4-hour to generate my trade plans. All right. Now let's do this. let's take this area here and look at, say, something like that on a 15-minute. Okay, so on a 15-minute basis, you could see a little something like this. So, rep. I'm going to ask you once, and then this is a zero tolerance rule I have. Self-promotion, not cool. Okay. All right, so let's take a look at this square here on a 15-minute basis. Okay, and you're going to have the same thing, right? Price toodles on up. All of a sudden, you get a breakdown. Okay, which happens to be this double top area on a daily basis. Okay, and then pulls. So this is your change of trend here. Price then pulls back to the red zone of that swing drop, and you get a little extension here. Okay, then you get a little bottoming out. Price comes back, comes off there, and a little extension to the upside. Can you guys hear me? I was just wondering if I lost my interweb, but I think we're good. All right. Okay, perfect. Thanks. Okay, so this looks like a bunch of squiggles, doesn't it? And a bunch of rank silliness and preposterousness. All right, thank you. I appreciate it. All right, guys. So this red zone here is the sell zone of this drop after a change of trend off the daily double top. Okay? Then price comes down, heads down, and then we resurrect the trend off the fib of the rise after a 4-hour change of trend to the upside. So you're going to use your 15-minute chart to navigate the longer-term turning points in the market. Does this make sense? Okay? So let's look at an example or two here. Well, I think there's a couple of ways to look at it. All right, we might as well. I tell you what, can we look at? Sure, we'll look at the euro dollar. Okay, no worries. All right. I don't like to look at. I don't like to look too far for examples. So let's do this. Okay, for starters, I want to just sort of cover. I want to just cover the old red zone, green zone deal here, if I may. Okay. So let's take this from the double bottom change of trend here off the daily level of support. Okay, so this is sort of the thing that I'm talking about. Let me grab a euro chart here on the right. Okay. All right, so take a look now at, let's use, for example, something like we had yesterday, where price came down and effectively ran right into the support zone. Okay, so we run right into the support zone. This is 2 days ago. At which point, price comes down. Okay, little swing fib of the drop. Swing fib of that drop comes down. Right. That then, because it's a broken swing fib, takes you to a move fib. Okay, we come off the move fib. I know I'm lagging, so I'll wait. Okay, we come off the move fib. Little 15-minute change of trend. All right, start to create higher lows and higher highs. All right, price then jogs up, and you get a big fat sort of Asia or late New York fade. All right, at which point it comes down to the green zone of this move fib rise. Okay, we open up the day in Asia yesterday at the roll reversal, and the roll reversal in the 50% fib zone. Right in the green zone, right at Asia open, guess what, it gets long. All right, then what happens is we come off the green zone. We come off the green zone of the rise and we hit the red zone of the drop. Okay, so this is green zone of the rise, red zone of the drop. And this is why a lot of folks are disgruntled when they're learning to trade, is because they'll buy, they might have an idea to buy at a 50% fib or something based on lots of congruent overlap. Take care to zero. Okay, they might buy at a green zone, intend to buy at a green zone, but inevitably get in at the red zone and then wonder why they're instantaneously wrong every time they pull the trigger. In other words, hey, let me get long, and then you buy it. You might have it in your mind that you're trying to get long here for whatever reason. You get long there, and you wait for price to react off there, and inevitably you're getting long somewhere in here, which is exactly where other people are looking to sell it. So, and you intend to buy here, but inevitably you find yourself buying up here. Well, what happens at that point is you find, even if it's going to work, you find sellers. So every time you pull the trigger, you're down like 17 pips. Oh no, how did that happen? You pay spread and then another 12 pips every single time. And the thing what's happening is you're actually buying where other people are selling. And then it comes against you, you panic, you get out, and then it starts to work for you, and then you chase it, and nothing good can come of that. Okay, anyway. Alright, so the red zone of the drop is simply based upon the fib of the drop and these previous swing highs here. Right, so it's the 50% it's a 380 to 618 of that drop, and then you come down to the green zone of the rise and you head up. Okay, then you head to the little double top area. London kicks in and takes you right down to 50% in previous swing hours, and this is where we longed yesterday in my session. Okay, so then price comes off the double top and comes down to a green zone of the rise. Okay, so here it is, little green zone, you hit the bar button. Alright, anyway, so let's move forward here. Okay, price comes off the little red zone of the drop, comes back, makes a higher low at 38, and punches up a little bit. Okay, now what's happened is we go up and we hit the daily resistance. Okay? And now we've got a couple of things going on. Now we've got, we've effectively got move fib, swing fib, and we're going to have another green zone in here, right? Based on this fib of the rise. Another little buy zone. Okay, let me crank it forward here a little bit. Okay, so here is a green zone of the rise. Alright, heads up to the top again. Okay, and now we've got a 15-minute change of trend to the downside. Okay, right, now you've got a double top and a break of the lows off a daily level of resistance. Okay, at what point, now what do you start to think? Well, now you look at this. And now you look at this, and your direction is now down. However, you're coming off a fib of the rise, so you expect to see a bounce here, don't you? So in other words, you've got a bar zone of the rise, but because the direction is to the downside, you're going to look for a short trade at the red zone of the drop. Am I right? And this 15-minute change of trend would mean nothing if it wasn't happening at an area of resistance, but it is. So you start to do this sort of thing. Grab your fib. Okay, move forward a little bit. Okay, there it is. Right, so now we're right back, retesting 38 and a red zone. David, how do I know what fib to take? It makes no difference. Okay, how do I know if it's a 382 or 50%? It makes no difference whatsoever. Okay, it is a zone. You need to think of your buy and sell areas as zones, otherwise you'll drive yourself demented. And frankly, if it doesn't get back to the level you wanted, then you just run the risk of missing the trade, and that's just opportunity profit. It's not costing you anything. Alright, so now you've got price action, direction to the downside, off a known area of resistance on a daily. If it goes to 786, it's still holding, Philip. The problem is if it goes all the way to 786, you're probably only going to double bottom at that point. Right, so the 15-minute change of trend is based on this double top and a break of those lows. That's one of our chart patterns for trend change to the downside. Just the same as this is a double bottom here and a break of those highs. This is actually the same chart pattern, just on a wider scale to the downside. And this is what I was talking about yesterday. This is what I was talking about. You see how you made the lower high? You kept making higher lows, therefore the uptrend remains intact. That's an important distinction to make. Okay, now. Sure. Here should be. If I was looking to short today, yes. Yep, I see no reason why you can't look at putting on something there around 37.90 zone based on that. Yeah. Pound looks good too at around 65.70. And guys, obviously I'm giving you the crash course abbreviation of things. Alright, I can't obviously teach you everything. I'd also encourage you to go look at some of the videos that we covered in previous webinars. This is a good refresher, but I have a lot more time there and it's recorded, and we did a lot more examples which will help sort of bring it into some kind of context. Right, so the daily chart is in a downtrend. We're at a known area of resistance around 138, and now you're getting a change of trend at that area of resistance. Okay, now, so price hits that level, comes off it. I'll post all the links here in a little bit, okay? Right, now we're making swing fibs to downside, right? Swing fib. Let me get rid of this here a second. Okay, retest of 138. In other words, sell zone here, ready for the shorty short. I'll keep drawing the fib. Okay, boom, off it. Okay. Right, so in other words, we go, right, swing fib, swing fib, swing fib. Okay, this is now, alright, so we've gone swing fib, swing fib, swing fib. This is now broken swing fib. What should you think next? Remember our little rule we came up with? Broken swing fib, move fib. There you go. Right, move fib. Bang. Okay, hesitation point. And obviously hindsight's easy. I make so much money in hindsight, you wouldn't believe it. Oh my goodness. I have not one, but 3 Aston Martins from hindsight trading. Okay? Not 1, but 3. Yeah, it's cool. Okay. Right, so we come up to our move fib. It's also these previous swing lows. Okay, now. Right, off our move fib, break the 786 of the rise. Now we think what? Swing fib, right? Okay, red zone. Short it. Okay, no support. Swing fib. Short it. Move fib. Anyway, blah, blah, blah. Okay, now, London opens at support. What do we do? 15-minute change of trend. Here's your 15-minute change of trend. Right at London open. Right at London open here. Then we think what? Green zone. Comes off a move for the drop. So you think move for the rise. And up she goes today. Okay. Then this takes us to the 4-hour. So yeah, so I'm going quickly just because I'm trying to cover a lot with you, and I'm probably sort of giving you a very general overview here. But then we come to this trend line of the drop, this previous swing high at 38.30, and now watch what happens. Well, that's the thing, Dixon, is that you've got to keep in perspective where you are on the longer term stuff to help you determine the overall direction of things. Okay, what is that now? What just happened on this 15-minute chart? Right, so what I'll be looking at exactly, Andrew. So to get in trades, I'll be looking at the fib, but I'll also be looking at the previous support, psychological levels, pivots, key moving averages, lots of confluence areas. That's what's probably more important than anything else. Okay, you got a little change of trend, exactly. All right, now, typically when I see something like this, and it's hit a move fib of the rise, I'll look for a move fib of the drop too to get short. All right, so, I actually didn't get the short today because of it. I was a little too conservative. But, all right, so something like this, there's a 50-minute change of trend. Now, the reason why this is an attractive short is not because it's just a 15-minute change of trend. I mean, because Dixon's absolutely right. This is a move fib of the rise, isn't it? And if you're trying to get long here, there's nothing wrong with that. It's just I trust the 50-minute direction. I trust the 50-minute direction a little more than because it's coming off the key resistance of the drop. So we've got a 15-minute change of trend off the longer term level of resistance. Well, I don't think this is against the longer term trend, frankly. I still think the daily is in a downtrend. It's simply coming off a move fib. Generally, I try not to know. Sometimes that's all that's presented to you for the day, but generally speaking, no. So if I look back on my trade log and we've been at a daily downtrend and 70% of my trades are longs, yeah, there's a problem with that. There's a problem with that. 70% of my trades need to be with the trend, typically. The problem is, I will say this, the problem is lately, and guys, so this trade was one I just never got into, just because it never got to where I wanted to. Which is just how it is sometimes with pullback-related sort of strategies. But I certainly didn't lose anything. And, I'd still look for a trade that looks like this now. Why not? What I've noticed here in the last couple of days, really it's been like this the last year, is, my trading schedule, in half an hour after the session ends, Ben, my trading schedule, I trade the pre-London session and then London. So I trade from midnight Eastern or 5 a.m. London and then for 6-7 hours. So from midnight Eastern through to around 6:30. Okay? I didn't take it off the bottom, no, Greg. No miss, yes, and that's what I'm going to do in the next session is we're going to do a ton of Forex tester just to sort of reinforce this knowledge. Basically mock trade 50 trades. do some live analysis, see what we got, maybe trade some stuff. I typically put my stops at higher highs or lower lows and then just manually exit on a break of the 618 fib. Cannot close below the fib. Andrew, on average, 3 to 5. Closer to 3 than 5. Yes, Boyke, as much as humanly possible. It's not always possible. Like next week, you're going to be doing something like this, most probably. Okay? So on the daily here, you're going to be in a downtrend. Okay, you are. This is still a daily downtrend, and I still think we're going to 110. But what's likely to happen next week is that we actually do this. Okay? And you could find yourself by Wednesday being here. And yes, the daily is going to be pointing to the downside. But Boyke, you're going to be buying this back up to the top. So really, you'll be going against the daily trend, but in the right direction. Morning, Miss Pips. And then only I expect price to sort of get itself cranking back to the downside. But yeah, you'll probably be in longs next week, dollar weakness positions, which is against the daily trend, but what's on offer for the week? Peter, no. You know what I've noticed lately too, and Boyke, this just relates back to your point, back to what you were saying. Look, if this is, check this out. Okay, if this is a one session and this is the other. Well, you can have direction for that day, but that doesn't necessarily represent the trend. Yeah, I mean, we've been up for 2 weeks on the euro, and that's got nothing to do with the trend at all. For the most part, try and trade it, probably 75% of the time. A lot of times I will trade against the 15-minute trend. Today I took a scalp based on 138 site level, or rather, so it was 38.30. It was an Audi Bollinger Band and some other stuff being hit. 103 on the Aussie dollar, Audi Bollinger being hit, and that was based on nothing to do with the 15-minute direction. Right, so use daily direction as my bias for the day. Yes. Okay, let me just talk. I've got 9 minutes here. Let me just burn through this quick response to Boyke. So Boyke's question is, do I always try to trade at the daily direction? The answer to that is yes. I'll show you my 2-bit analysis there in a sec, Fergie. As much as possible, I always try to trade at the daily direction. Unfortunately, it's not always possible. Okay, because if this is Asia Open, so let's say this is 8 a.m. Tokyo. AO means not area of operation, but Asia Open. Okay? You know, let's say New York does this, takes you up, and then late New York fades you down, and you open Asia at support. This was yesterday's trading day, opening at support. Asia has no choice but to buy it off support, despite what the prevailing trend is, basically speaking. Obviously, if you break support at the market open, it'll be posted under my name under presenters and webinars at FX Street. Okay, so if you open if you open any major market open at support, generally it's going to go up, despite the prevailing trend. All right. So said differently, if you break support at the market open, you're just going to fall through the floor for the entire session. Said differently, if you open at resistance, the chances are you're going to drop for that session, despite what the prevailing trend is. It's just that whole buy low, sell high thing. It's just a product of psychology for the day, not necessarily what the overall trend is. Okay? Alright, so if this happens now, right, Asia opens you up. Okay, this has been happening. Okay, and then this is where I start to teach. This is midnight Eastern or 5 a.m. London. Okay, what's happening is that we're already elevated. Okay, but because there's no fresh money coming in the market, there'll be a continuation. So we see this sort of thing. Boom. And a continuation. And we've been capturing this. So Asia will be about 60% of the move. And then pre-London about 40% of the move. And we saw this today of 102 on the short side on the Aussie. Okay. Then what happens is we get to the top, and London opens you right here. What do you think London's going to do? So London opens you up right here, London open. And you're well extended, and, you know, London does this sort of thing. A little bit higher. Oh, okay. How would I trade pound right now? I'd wait for it to come back to 57.60 and then short it. Try and sell that down to 56.60. Yes, Boyke. And this is why I say to you guys every time I come in here, I'm like, look, I've got nothing new to show you. My trading strategy hasn't changed in 6 years. I always worry about people that are always doing different stuff. Like, if it's working for you, why are you changing it? It's like, stick, and this is what I'm saying to you, the most detrimental thing that you can do for yourself is repetitively looking for new stuff. I don't care if you're doing entirely the wrong things. Just do one thing and become an expert at it. You know, so if somebody says to me, I have this method where I look for 17 crossovers and 42 Fibonacci's and 13 pitchforks, I'm like, brilliant. Do you make money out of it? Yes. Fantastic. You're my hero. I'll never snicker at anybody's strategy if they're making money out of it. But don't come to me one day and say I'm a fib expert and come to me tomorrow and say I trade with GAN fans. Well, what happened to the fibs? Yes, I do. Yeah. But I also pick my swing trade strategies very strategically. I'll only take a swing trade on a daily swing fib or after the second move of a daily move fib. So, you know, this is what I'm talking about. Is to me, right, so to me, although this euro is at a rollover point, to me this is not a good time to take a swing trade on the euro. Okay, this is not a good time to take a swing, because what's going to happen is we're going to do this, and then we're going to come all the way back to the top, and then we're going to go. Because this is the green zone of the rise, and we're going to come off that, aren't we? So to me, this is all spot trades through here. Get in, get out, 50, 60 pips. And then when it comes up here and resurrects the 4-hour trend to the downside, great, now we're in good position, and we can start to try and build some stuff. But it needs to kick out those buyers first. GAM, in the immortal words of Mike Tyson, everybody's got a plan until they get punched in the face. I typically look at between 3 and 5 pairs, Maverick. I don't trade with oscillators, but I know a lot of people that trade very effectively with them, so I'm certainly not gonna poo-poo them by any means. Okay, euro analysis very quickly, and then I'll wrap it up here. I know I'm under the gun. I think that overall we're doing this. I think that overall we're in this massive channel. And this is a weekly chart. And I think that we're stepping our way down. We're stepping our way down to the bottom of this channel, and that's right around 110. Yeah, I think we're in some brilliant daily downtrends. It's just we're in move fib tracement mode. I think the negativity got ahead of the price action. Whenever there's so much negativity, I got this buddy of mine. He got injured in combat. He does nothing but sit around at home and play FIFA soccer on the PlayStation because he's all broken. And, you know, I had him calling me and telling me the economy's bad. At that point, I knew it was time to get long the stock market. What I'm going to do, PJ, is I'm going to take this base knowledge that we've learned here, and I'm going to bust out the Forex tester and the live charts, and we're going to do a ton of analysis, and we're going to do about 30 trade examples of this to try and consolidate this knowledge. That's the agenda. A little bit of Q&A, and we'll call it good. If it is NOMIS, I'll deal with it if and when the trend changes. But for the time being, she looks pretty freaking bearish. You know, but I do expect this sort of thing. I do expect this sort of thing next week, though. You know, I don't think you're going to see a precipitous drop. I expect this kind of thing. Might even make higher highs and then kind of resurrect the trend back to the downside. So, anyway, guys, I hope that you learned something today. You know, if you have any questions, by all means, join me in the next session here in 30 minutes' time. Otherwise, email me, david@fxbootcamp.com, and I hope that you enjoy the session. Okay? Take care, and those of you that are going to be in a couple of minutes, I'll see you in a little bit, okay? Cheers.